everybody. Good morning, everybody. My name is Bailey Fuqua, and I'm an account manager with Enrollment First, and I also dabble in broker support a little bit. So you all, or some of you might have spoken with me already. Today's agent training is going to either introduce or reintroduce you to Enrollment First, as well as the products offered through America's Consumers and Affiliates Limited Partnership. I'll start off with just a little bit about us at Enrollment First. We have over 21 years of experience providing simplified benefits administration. We initially got our start in the trucking industry, filling a void for those 1099 independent contractors, but today we cater to clients of all sizes with turnkey solutions that streamline invoicing, communications, and broker commissions. Currently, we support over 170,000 members, 1,000 plus groups, and 7,000 plus broker partners. We are 100% broker driven, so I want to thank you all for joining me today to go through the benefits we offer. Our platform supports niche markets, including self-employed individuals, small groups of 3 to 49 lives, and large groups. Whether your clients are freelancers, small businesses, or associations, our product suite can provide the benefits they need. Today's products will be focused on the individual client. However, if you have any W-2 employer groups or non-traditional groups, please reach out and we'll be happy to put together a proposal for you. The products we offer to them are very similar, but have a few differences. The limited partnership is the group who holds the contract for the benefit suite. The group was formed to give consumers an opportunity to earn an income through data collection. As consumers, we are all providing our data for free through use of our internet browser, social media platforms, cell phone companies, and GPS devices. The way the limited partnership offers this is by utilizing technology that allow partners to share their geolocation data, which in turn provides valuable consumer feedback for businesses, creating a revenue stream where the majority is paid to the partners who share this data. Partners will use an app, Rolling Strong, that tracks geodata as an easier way to contribute to the hours of activity required to maintain active status with the partnership. This app will also house their ID cards, benefit details, and valuable health and wellness management tools to meet their health goals if they choose. Of course, this app may be turned off or not used at any given point in time. However, limited partners must contribute 500 hours of geo-tracking in a calendar year in order to be considered an active partner and eligible for benefits. While this might seem like a lot, it actually works out to be about 10 hours per week. Knowing who the limited partnership is important because it is required that anyone purchasing the benefits be a partner of the group. The limited partnership offers benefits that includes tiers of medical coverage, dental and vision plans, as well as hospital indemnity, term life to age 121, and accident coverage. In addition to covering the product offering and ways to offer it to your clients, we'll cover the limited partnership a little bit more in depth later and its role in being able to offer them. When you become appointed with Enrollment First, you'll have access to all of these to offer to your clients through the LP. You'll have an online enrollment portal that is unique to you, where clients will enroll themselves from quotes you can send through your agent portal, or use a customized link that is a website that you're able to use where anyone can go shopping on their own and enroll themselves. Like any group offering medical plans, America's Consumers and Affiliates Limited Partnership is required to follow all ACA and ERISA compliance regulations. Since this is a self-insured or self-funded group offering, ERISA dictates there be no discrimination due to health conditions or age, among other non-employment related criteria. And like ERISA, the Affordable Care Act also includes the same non-discrimination criteria for individuals and groups. If the group did not abide by this, it is a violation of federal laws and calls for some major DOI and DOL issues. So to protect the longevity of the plan for both the limited partners and our broker partners, all Select Med plans are guaranteed acceptance, available to ages 18 to 64 plus. 65-year-olds may enroll. However, due to coordination of benefits, these plans should not be sold in combination with other ACA or ERISA compliant plans. For example, the Marketplace, other employer plans, or Medicare. And there are also no pre-existing condition exclusions. All tiers have preventative services being covered at 100% per the ACA, but also include doctor visits, labs, and prescription benefits, and much more for the highest tiers. To dig in a little bit, here are the two levels of enhanced minimum essential coverage, which goes beyond the wellness and preventative services. The PPO network on these plans is First Health, which is an Aetna subsidiary. FirstHealthLBP.com is where clients can go for the provider lookup. Clients should always confirm with the provider that they are in network, as there is no out-of-network coverage on these two tiers and also no hospital coverage. You'll see a deductible only on the Max plan. This applies to the outpatient CT, MRI, and PET scans line exclusively. We are required to show the out-of-pocket max on the plans. However, due to the limited nature of these plans and coverage, there is virtually no way a client could get to this amount on these two plans. Preventative and wellness services are covered at 100% when in-network and non-hospital based. Like many other ACA compliant plans, these plans follow the USPSTF recommendations by covering the grade A and B services. Also, a reminder that this coverage is for preventative services, not diagnostic. These tiers include unlimited $0 copay, telemedicine services through RelyMD. Both the Pro and Max plans have office visits included for primary care, specialist, and urgent care with a copay. On the Pro plan, all three types are limited to 5 total per year. This is where that telemedicine can come in handy to avoid using up an in-person doctor visit. On the Max plan, the number of visits are unlimited. Both plans have diagnostic testing, including X-ray and blood work with a copay. However, again, the Pro plan is limited to 5 visits per plan year, and the Max is unlimited. Outpatient CT, MRI, and PET scans are covered only on the Max plan for 50% coinsurance per pre-authorized test. And like I mentioned previously, this is the only line item that the deductible applies towards. Outpatient mental and behavioral health is covered as a specialist visit on the Pro plan. It counts in the 5 total physician visits per year. On the Max plan, it's covered with the copay, unlimited visits. Rehab and habilitation services are covered on the Max plan. 10 of each type are covered with a $50 copay. However, pre-authorization is required after 6 visits of either service. The ProAct prescription benefit on the Pro plan includes formulary generics with 20% copay, limited to 12 annual prescriptions with a 30-day supply max. This means, for example, a 10-day round of antibiotics would count as one of the 12 prescriptions allowed. The Max plan has 2 prescription benefits in most states. All states have the ProAct generic formulary with $20 copay, 30-day supply max with unlimited scripts. The Max plan also has a second prescription benefit through RxSense with generic and brand formularies in all states except for New York, South Dakota, and Washington. There's a 30-day and 90-day supply allowable with a $750 annual max per member or $1,500 per family. Both the ProAct and the RX Sense plans used for the Pro and Max products allow purchase for non-covered drugs, either beyond the limit or not covered on the formulary, at 100% of the cost at the contracted and network rate. The monthly premiums are competitive and affordable. While the plans are limited in nature, they are helpful for healthy individuals and families who have budgetary concerns about taking on other more expensive major medical plans that also require high deductibles to be met to use the benefits. Moving into our upper tiers of medical coverage options, just like the Pro and Max, all of our medical plans are again guaranteed acceptance ages 18 to 64 and cannot be combined with any other ACA compliant plan. If they don't have one, then they can enroll in this plan. These plans were specifically designed to have one rate for all ages, all states, with no pre-existing condition exclusions. Year-round enrollment is available for new partners, so it helps those unable to enroll in marketplace or employer medical plans outside of open enrollment. This plan is also again ACA compliant and has a PPO network for non-hospital doctor visits, labs, etc. We'll start with the value plan. The PPO network is multi-plan PHCS practitioner and ancillary network. In some states where the marketplace plans have only HMO options or smaller PPO networks that limit the provider options, these plans are helpful to offer a wider network of providers. There is a $0 deductible, and the out-of-pocket maximum shown here applies most to the reference-based pricing portion of the plan. So we'll get into how that works on the next slide. The same rules apply to the wellness and preventative benefits as on the previous Pro and Max plans. Most importantly, providers must be in-network and no hospital-based providers for the wellness and preventative coverage specifically. Like the Pro and Max, the telemedicine is $0 copay, unlimited visits. The value plan has doctor visits with a copay. Note the limitations on the visits, so 6 for primary care specialists and mental health visits per plan year. The other physician services performed in office line item was added to these plans to cover a situation where a service such as stitches or other minor in-office outpatient services is provided, but not covered in the copay of the consultation portion of the visit. Under diagnostic services, you'll see labs and radiology have a combined limit of 3 per year with a copay. CT, MRI, MRA, and PET scans are offered with a copay in a non-hospital setting, with the balance subject to reference-based pricing. For hospital and facility services, the plan uses reference-based pricing in lieu of a PPO network. RBP is an alternative to the traditional PPO network discount billing and allows the insured more transparency in their actual cost. Reference-based pricing works by using an established benchmark, such as Medicare, to negotiate rates with providers to determine a fair cost to ultimately contain costs for the insured and prevent the wide variation across states and providers in what is billed for the same service. Advanta is the advocacy services that assists with pre-service negotiation and balance billing with providers for the client to get as close as possible to the Medicare benchmark. The negotiation, for obvious reasons, works best when done in advance of a hospital stay, and clients are instructed to call the number on the back of their ID card to verify benefits prior to any services at a hospital or facility so that Advanta can work with providers to establish a reimbursement agreement before services are rendered to get the best rates. Reference-based pricing helps your client know their medical cost in advance in every case except for an emergency situation. And this is where Advanta will assist the client with the negotiation of the balance bill that would likely come after services are rendered. With an ER situation, there's no luxury of knowing your cost prior to services rendered, which is the chief complaint of reference-based pricing plans. On this plan, inpatient hospitalization has a $350 copay per admission. You'll see the limits of 3 days here, so this part of the plan is built in as a just in case. Inpatient physician visits, surgery, and anesthesia, covered labs, testing, etc. are all included in the initial inpatient hospitalization copay, with the balance subject to reference-based pricing. This is also where that max out-of-pocket will come in. For example, as to how this works, if a client has a knee replacement surgery and the bill for covered services is $27,000, Advanta will help negotiate it down. Let's say they're able to get it to $12,000 based on what Medicare allows providers to charge for that particular service. The client will be responsible for the copay and the maximum out-of-pocket. Outpatient hospital and surgery has a $350 copay, and the balance is subject to reference-based pricing. Same for the emergency room, a $350 copay, and balance is subject to reference-based pricing. Emergency situations are the biggest concern people voice with reference-based pricing due to the fact that negotiating rates for services already provided is more difficult than doing so in advance when the hospital is trying to gain your business. Even so, we've been told in most states the savings after negotiation are still pretty significant and better than many PPO network discounts. Pregnancy and childbirth are not covered on this plan outside of the ACA required wellness services. Other services provided on the plan include allergy services. This is a copay that is in addition to the primary care or specialist office visit copay. Home health care, 5 with a copay per plan year. Mental, behavioral health, or substance abuse services, these plans offer inpatient and outpatient with copay and balance subject to reference-based pricing. Inpatient is limited to 3 days per year, and outpatient is limited to 1 day per year. Chiropractic services are not covered under this plan. Land ambulance is covered with a $250 copay, 1 allowance per year, and the balance is subject to reference-based pricing. The pharmacy benefits match the RX Sense plan on the max tier. Brand and generic with a 30 and 90-day supply and $750 annual max per primary and $1,500 per family. The same state exclusions of New York, South Dakota, and Washington, with the same additional benefit of non-covered scripts being covered at the cost of the contracted network rate. Monthly premiums shown here are for all ages and all states offering the coverage, as mentioned previously. Depending on the age of your client and the state that they live in, these may be more competitive than what you see in your area through the marketplace, especially for those in Florida, North Carolina, Delaware, Texas, and Georgia, to name the top 5 states with the highest individual and family premiums. There are also many areas who only offer HMO plans on the marketplace, so these PPO plans are a great alternative for those areas. Definitely a plan that should be compared and considered in your state. Moving into the next coverage option is the Copper plan. Again, this plan is ACA compliant and guaranteed by an actuarial firm to qualify as a minimum value plan. There is a $9,200 deductible, which matches the out-of-pocket maximum. Once the 9,200 has been met, the plan pays 100% of covered services. The same rules apply to the wellness and preventative benefits as on the previous plans. Again, the telemedicine is a $0 copay with unlimited visits. The copper plan has doctor visits with a copay. There are no limitations on the visits. Again, the other physician services performed in the office line item was added to cover those situations like stitches or in-office outpatient services. Under diagnostic services, you'll see labs and radiology do not have a limited number of visits allotted. However, they will only be covered once the deductible has been met, and the same applies for the CT, MRI, MRA, and PET scans. On this plan, inpatient and outpatient hospitalization does not have a copay per admission. Again, the service is covered at 100% once the deductible has been met. This plan does use reference-based pricing in lieu of a PPO network. Inpatient and outpatient physician visits, surgery, anesthesia, covered labs, testing are all included in the initial hospitalization. Same for the emergency room. Pregnancy and childbirth are covered on this plan. Professional services and office visits will have a $25 copay per visit, no limitations. Maternity, childbirth, and delivery is considered an inpatient hospital stay, and the plan pays 100% once the deductible has been met. Other services provided on the plan covered at 100% after deductible include allergy services, emergency medical transportation, mental and behavioral health or substance abuse services, both inpatient and outpatient. Home health care is also covered after deductible with a limit of 60 visits per plan year. We also have chiropractor services included in this plan. These are in network with 20 visits per plan year with a $45 copay. And again, the pharmacy benefits match the RX Sense plan on the max and value tiers. Monthly premiums show here are, again, for all ages and all states. Last, on the Bronze Pro plan, it is guaranteed by an actuarial firm to qualify as a minimum value plan or Bronze Metallic plan based on the 60% actuarial value assigned. There is a $5,000 deductible and an out-of-pocket maximum of $9,200. Again, the same rules apply for the wellness and preventative as on the other plans, and the telemedicine is a $0 copay, unlimited visits. The Bronze Pro plan has doctor visits with the copay, $25 for a primary care visit, $45 for specialist and other physician services performed in office, similar to previous plans, and $45 copays as well for urgent care and mental health office visits. There are no limitations on any of these visits. Under diagnostic services, you'll see labs and radiology and CT, MRI, MRA, and PET scans have 20% coinsurance after the deductible has been met. On this plan, inpatient and outpatient hospitalization, physician's visits, surgery and anesthesia, and covered labs, testing, etc. are all covered after deductible with 20% coinsurance. The plan again uses reference-based pricing in lieu of a PPO network. Pregnancy and childbirth are covered on this plan as well. Professional services and office visits will have a $25 copay per visit with no limitations. And again, the maternity, childbirth, and delivery is considered an inpatient hospital stay. But once the deductible has been met, the patient is responsible for 20% coinsurance. Other services provided on the plan that are covered at 20% coinsurance after the deductible has been met include allergy services, emergency medical transportation, mental and behavioral health, substance abuse services, inpatient and outpatient, and home health care is also covered after deductible with a limit of 60 visits per plan year. Again, this plan will have chiropractor services. These are in-network with 20 visits per plan year with a $45 copay. With the Bronze Pro, the pharmacy benefits are subject to the Pro Act Advantage formulary, with the same additional benefit of non-covered scripts being covered at the cost of the contracted network rate. So this is the only plan that has a different pharmacy benefit included. And here are the rates for all ages and all states for the Bronze Pro plan. In addition to our medical plans, we also offer other voluntary products through the limited partnership. Dental and vision options starting at 1967 and 1022 respectively. Term life to age 121 with only one health question, conditional acceptance. Accident medical expense and hospital indemnity to round out the LP offering. All of these are included in the 2025 product brochure, which is located in your Enrollment First broker portal at all times. And I'm also happy to share a copy as well to those who are still considering appointment with us. Outside of the medical and life products, dental is our next highest product sold. They're great group rates that don't vary by state, zip code, or age. 100% coverage on preventative services with no deductible. There is a 12-month wait on major services. Vision is also an easy add-on due to the low rates for coverage. This is a standard policy with lenses every 12 months and frames every 24 months. The network does include many Walmart Vision Centers, Lens Crafters, Sam's, and the like. All right, next we'll move into our life product. When referring to permanent life insurance coverage, many are probably thinking of whole or universal life, which typically have a cash value accumulated and allow for loans, but also a reserve is required for the carrier, which can result in higher rates. Term life insurance is a favorite due to its lower rates. However, many of those products have a 10-year or 20-year term that the policy will last to, and rates can increase significantly to renew the term. Our term life to age 121 plan is a term life insurance plan that can terminate only for non-payment or the insured reaching the age 121. The product offers financial protection with a level death benefit and level premium for a lifetime. So like the name suggests, your benefit amount will not decrease and your premium payment will not change. Your client can purchase up to $50,000 in benefit with only one health question, but the one caveat is that the applicant also must be actively at work. The plan is eligible to those ages 18 to 70 and are uni tobacco rates. The maximum benefit available is up to 150,000 with 6 health questions but no health exams. The states excluded are Alaska, Hawaii, Colorado, New York, and Washington. There are some great riders automatically included, starting with the quality of life. The benefit accelerates 70% of the death benefit as a lump sum payable directly to the employee for the following: permanent inability to perform at least 2 of the 6 activities of daily living without substantial assistance, or permanent severe cognitive impairment such as dementia, Alzheimer's disease, or others that require substantial supervision. The benefit can be selected up to age 65, with coverage remaining in place until age 121. This will reduce the benefit paid upon death. The accelerated death benefit, which covers a terminal illness diagnosis where the policy pays a lump sum of 30% of the coverage amount. Again, here using the rider will reduce the benefit paid upon death. Children's term insurance, which will provide up to $10,000 in coverage at a cost of $2 per month for all eligible dependent children, or $1 per month for $5,000 in benefit. Eligible children are those who are financially dependent on the insured and between the ages of 14 days to 19 years or 26 years if a full-time student. This can convert to permanent at 18 years for up to 5 times the face amount. And last, the emergency death benefit, which is payment of 50% of coverage or $10,000, whichever is less, within 1 business day of notification, unless the death is within the 2-year contestability period and or under investigation. This is specifically designed to help with those urgent final expenses. So for up to $50,000 in benefit for the primary, only one health question with a 12-month look back is required, and it is a knockout question. For greater than $50,000 in benefit up to $150,000, 6 health questions are required, which are also knockout questions. I'll review those questions on the next slide. Spouse can get up to 20,000 with 1 question and up to 150 like the primary with 6 questions. There is no third-party data collected for this product that determines acceptance or rates. The premium rates are only determined by the coverage amount, the age, and the gender of each applicant. The one non-health question involves the primary certify on the application that they are actively at work. The singular health qualifying question for up to 50,000 in benefit reads, in the past 12 months, has any applicant needed assistance for a loss of 2 or more activities of daily living, received chemotherapy, radiation therapy, or dialysis, been diagnosed, treated, or prescribed medication for AIDS, AIDS-related complex, an immune system disorder, or a terminal illness? Again, this is a knockout question. If the applicant answers yes to any of these, they're not able to continue applying for the coverage. This applies to all applicants, including spouse coverage. You'll also see the further questions for up to $150,000 in coverage. I won't read them all out to you, but the questions are also found in your broker portal at all times, and I can provide a copy as well if needed. The eligibility requirements for the primary applicant, going into that actively at work a little bit more in depth, the long and short, to qualify no matter where you work, W-2 or 1099, you have to be working 20 hours minimum and able to perform the usual and customary duties of the job for at least the past 30 days. Eligible applicants cannot be confined to a medical treatment facility or disabled due to injury or sickness. For those who work from home, they would also have to be able to work at an employer's place of business if required. Proof is not required at time of enrollment or issue, however, may be required at the point a claim is filed. So if the employment outlined above is questionable at all, for 1099s, for example, I recommend you encourage your client to keep a copy of proof with their policy certificate. If your client is getting any kind of disability income, he or she is not eligible. Here we have a sampling of rates for $50,000 in benefit. I'll go over the commissions just a little bit as well for this. They are a hybrid between a standard or a heaped schedule and a levelized schedule. So standard or heaped refers to what you're probably used to, which is a high comp the first year with a drop to a much smaller percentage for renewal thereafter. And level refers to just that, a level commission percentage for many years. Level is typically a lower commission since it is received for many years. So in lieu of standard or heaped, 5-Star has adopted a hybrid. Their hybrid compensation model offers a set commission percentage for years 1 through 3, and then another set percentage for years 4 through 9. It's not until year 10 that it drops to a renewal comp. A hybrid compensation model, like the one 5-Star has created, offers financial stability because you won't see the massive drop in commission after year 1 for policies that are still active. With this model, you're building income year after year. The average length of time someone holds on to a life policy is about 7 years. So with that in mind, the math says that the commissions during this time far surpasses actually more than doubling the standard heaped first year and renewal of 2% or less years 2 plus. Next, we have our accident insurance to supplement those extra expenses due to an accident. The eligible ages are 18 to 70, and it is guaranteed acceptance. We're offering 2 different product options, and both are 24-hour coverage. Spouse and dependent coverage is available as well. Here is an abbreviated chart of benefits available on the accident plans. The main difference is the design. Plan 1 is your typical indemnity product. The benefit amounts are paid based on the specific injury due to a covered accident, where Plan 2 is an accident medical expense indemnity hybrid product. Both offer variations of your typical indemnity benefits, and I've selected a few of the more commonly seen accidents on the next slide. The biggest difference is the accident medical expense included in the hybrid policy. The hybrid policy includes $1,000 that can go towards accident expenses that might not be in the indemnity benefit. I've highlighted a few commonly used benefits, including surgical, dislocations, fractures, and lacerations. A full list of covered accidents are available anytime in your broker portal and in our product brochure. As to how this works, here's an example of an accident that would have been covered under a policy like this. A few months ago, my husband had a pretty ugly finger laceration with slicing some cucumbers with a mandolin. The laceration was less than 2 inches, but required almost a dozen stitches in the ER. The indemnity only policy would give me $200 in benefit for emergency treatment and $100 for the laceration less than 2 inches line. My bill came in at about $600 when it was all said and done after insurance took care of its part. With the indemnity only policy, I would have had an out-of-pocket cost of $300. On the AME policy, there is a $50 ER deductible, so I would pay the $50 out of pocket, and the policy pays the remaining amount up to $1,000. So it would pay $550 in this example and would leave $400 remaining in the AME benefit. On top of this, a minor surgery on the finger might be required if he doesn't heal properly. I could still apply the rest of the AME and there would be a surgical indemnity benefit I would receive. Note that while the coverage can include dependent children, the AME benefit for children has a maximum benefit of 2 times the AME benefit amount for all covered children. Monthly premiums are shown here for all ages and all states offering the coverage, as mentioned previously, and are an easy addition to the other benefits we offer. The rates are pretty similar, so it really just depends on how your client would most use the plan. Agent compensation on this plan is a standard or heaped schedule. After the first year, it drops to renewal rates for its lifetime, and compensation is paid per policy sold per month. Next, we have our healthcare indemnity product, which is guaranteed acceptance. Cash benefits are paid directly to the insured or medical service providers when an employee is hospitalized or receives other treatments covered under the policy. It is available to individuals aged 18 to 70 with options for adding both spouse and dependent coverage. This product supplements medical coverage gaps like high deductibles, high copays, out-of-pocket maximums, other uncovered expenses, or simply a loss of income as it's paid directly to the insured. The plan starts with a $5,000 first day hospital confinement benefit and has the same minimal state exclusions. Here are the two tiers of coverage available. The low policy offers $5,000 in a lump sum for the first day of hospital confinement and $100 per day for 31 days. The high policy offers the same with added ICU confinement for first day and daily, emergency room treatment compensation for 3 days each for covered accidents and sickness, and a $1,000 inpatient surgery benefit. Maternity is also included in both plans. There is a pre-existing condition limitation on this plan that has a 6-month look back and 6 months going forward. So that does mean treatment free during that time. These plans start at $76 monthly for the low tier and $91 monthly for the high tier. Our voluntary benefits can be sold a la carte, alone, or in combination with our other products, including the medical plans, life, and accident insurance. Agent compensation on this plan is levelized, so it remains the same commission per plan year per month for 9 years. In year 10 and beyond, it drops to a renewal percentage. We've recently launched the availability of GLP-1 weight loss meds, offering a cost-effective solution for weight management. So starting at $199 per month, that price includes physician consultation, medication, and delivery direct to your door. Our GLP-1s feature the same active components found in popular weight loss drugs like Wegovy and Ozempic without that hefty price tag, and are available in both injectable and tablet forms to suit individuals. These products specifically are open to all individuals. There's no membership or employer restrictions required. This product is not on the broker portal and does not have any commissions involved. We just recognized a gap in our medical coverage, like most other insurance companies, and wanted to be able to offer these drugs to consumers at a lower cost. The website for access is glp.enrollfirst.com. So we've covered several products today. So let's talk just for a quick minute about the overall general market for these plans. So healthy individuals aged 18 plus. I only say healthy because the medical plans here do have some limitations and are not for individuals with major health conditions. The marketplace is still the best option for them with the level of care that they need. Individuals not receiving benefits through work or are waiting to be eligible, those who you have previously sold short-term medical plans to, sole proprietors, self-employed, or 1099 independent contractors who have no options at employer-sponsored plans and often have trouble finding insurance for their families. For example, real estate agents, those in sales, truck drivers, hairstylists, delivery drivers. Member groups can endorse the limited partnership benefits as well. We've been able to work with associations, chambers of commerce, or trade groups where the group is looking to add value to members, increase growth, and maintain good retention. Members of the group endorsing can become active limited partners and have access to their benefit suite. With an individual payment option, this fits for many other groups as well. We do realize that this is a bit of an unusual way to earn income and really access health and life benefits. However, it allows us a unique way to close that gap in coverage for many who are able to access a group benefit suite with group underwriting and rates to any capable individuals willing to join and participate as an active partner. It's available in 46 states and requires minimal participation on behalf of the client. To access the health benefits and take advantage of what the limited partnership offers, your client's steps are pretty simple. To start, your client joins the limited partnership, becoming a partner, which is free with no membership fees or dues. To become active, a partner can simply download the approved app and use it to share their geodata in the background. Like I mentioned a moment ago, there is opportunity for income involved. The LP sells the geodata and the participating partner gets a piece of that pie. And all active partners are eligible to participate in the benefit offering. So by now you may be thinking, what's the enrollment process look like? Every appointed broker gets access to a broker portal to send quotes to their client and a client enrollment portal link they can share with their client. Our approval as an enrollment company depends on the client doing the enrollment themselves. A broker cannot enroll for a client. And just as a side note, this also protects the broker if someone answers a health question falsely or uses someone else's payment information. It puts the onus on the client instead. Most brokers are now sending clients a quote through their broker portal. The client can easily click the link and be taken to a shopping cart to consent to join the LP and enroll in the plan you quoted, add their payment information, and they're done. Another perk of sending a quote this way is that as a broker, you can see when a client has opened the email, clicked the link, and completed enrollment in your broker portal. In your broker portal, you can also copy your client enrollment portal link, which is found under the Resources tab, and paste it into an email to send to your client. This way, the client can view all products available and do their own shopping. The client view looks like the screenshot here. However, there's no tracking to see how far a client has gotten in the process to follow up with them. The client does agree in the enrollment process that they are committed to satisfying each of the plan eligibility requirements, which is just joining the limited partnership and sharing geodata. The client will receive a confirmation email to confirm their enrollment from Enrollment First. Rolling Strong will send an email to the client on their effective date to sign and join the limited partnership. Enrollment is not officially complete until this is signed by the client. So to summarize, an enrollee must download the app and sign the joiner agreement to finalize enrollment and access their benefits. As I mentioned previously, Enrollment First has partnered with Rolling Strong to give exclusive access to their platform of health and wellness tools. The app is the gateway for limited partners to access benefits and maintain eligibility while also supporting their own personal health journey. Once a limited partner has downloaded, registered, and signed the joiner agreement in the app, they will have access to all of the perks Rolling Strong has to offer. Some highlights would be the ability to track calories by logging food from a variety of different restaurants and their own personal meals, stress and sleep management tools, wellness coaching, workouts, health assessments, and a variety of metrics. This app is also the only location where insureds will access their ID cards. They will no longer be emailed or mailed. Also, within the Insurance Hub, insureds will be able to access all relevant plan documents here. So as a final review, to review how easy it is for your client to become an active partner, your client will receive a registration email on their first day of coverage from Rolling Strong. They will then download, register, and log in to the Rolling Strong app and be prompted to sign the limited partner joiner agreement and allow their geodata to be shared. And finally, the client simply shares their geodata as they travel day to day. There's nothing monthly that they have to do, or it's just turned on in the background. Activity is measured in hours, and hours are calculated during the time the apps are tracking geolocations. The app is not required to be on at all times, but again, 500 annual hours is required to be considered active and eligible for benefits. So again, through the limited partnership, medical plans and health voluntary products are guaranteed acceptance with no health questions. The exception would be the term life to age 121 product with the single health question to qualify for coverage. The effective date will always be the first of the month following completion of a 7-day waiting period, which begins on the date your client enrolls and joins. Depending on if there are 30 or 31 days in the month, this usually falls on the 23rd or 24th, so just keep that in mind for your cutoff. Similar to any other employer plan, newly joining partners may enroll in the group's benefit at any time of year without any additional QLEs, just like a new employee would be eligible for employer benefits upon hiring. Once a client has joined the limited partnership, the standard annual open enrollment for the group is November 1st to January 23rd. Excuse me, November 1st to December 23rd, with a January 1 effective. Outside of annual open enrollment, a QLE is required for a limited partner to make changes mid-year. The LP's plan year matches the calendar year of benefits, which currently matches marketplace open enrollment. Clients will not have to start deductibles over mid-plan year, and there will be no rate changes mid-benefit year for the group. So getting approved to offer these plans through the opportunity is pretty easy. The medical plans are self-funded plans offered through the ACNA Limited Partnership, which are administered by Enrollment First. To offer the limited partnership benefit suite, agents will need to complete appointment with us first. And agents will need to submit any other state license that they wish to be appointed in. So really to get started, all we need are your license, E&O certificate, and then a broker contract that is sent to you. Enrollment First also administers and pays out any commissions to this product. Actually, I read that wrong. Apologies. Ignore everything that I just said on that last little bit. But there are no production requirements or vesting requirements to maintain any commissions on active policies. That concludes the presentation for today. If we'll go over our questions in just a second, but last thing, if you have any questions regarding any products, contracts, commissions, broker client portals, anytime outside of this, our broker support team is available Monday through Friday, 8 to 5 at 866-951-8404 or broker support at enrollfirst.com. And I'm also happy to help with any sales questions you may have or can point you in the right direction. So thank you for your time and attention today. I'll hit up some questions really quick. Looks like we have a few. What happens if a client goes to a doctor's office connected to a hospital or in a hospital but operates apart from it? Does that make sense? Yes, that makes sense. So as long as they are not being billed through the hospital, then they are covered. For example, one of the physicians I use is associated with a hospital, but they bill directly instead of the hospital as a whole billing it. So it would be covered as long as they bill it directly from the doctor's office. Do clients get in-network discounts if they use past their visit limits on the Pro and Max plans? For the doctor visits, I think that's what you might be asking. Once they have reached their limits on the Pro Max or value plans, then the coverage is no longer there. The Max plans don't have any visit limitations, but the Pro and value would not be covered if after they've met their allowed visits. Do clients get physical ID cards? And if so, when are those sent out? No, they do not. We no longer send physical ID cards or email them. They are only accessible in the app, which they are invited to on their first effective day of coverage. Is there an actual annual max on outpatient drugs? There is not an annual max set for anything, drugs or um, billing in general for anything. There's no maximum amount allowed. Um, but it will be trying to figure out how I want to say this. So there's no cutoff amount that they would reach that the plan stops covering amount wise. But if, for example, in the Pro plan, there is a cutoff of 12 prescriptions, but there's no maximum amount that is cut off. Is this offered in Pennsylvania? Yes, it is. Actively at work just for when an insured first applies. So we have been told that the most likely time that the proof of being actively at work would be in that 2-year contestability period. So outside of that 2-year contestability period, it will not be a requirement to provide that. The example that I was given was someone can enroll at 50, they hold the plan for 15, 16 years, they retire, they're no longer required to be actively at work at that point because they've far surpassed the 2-year contestability period. Is this product on a group platform and able to be canceled down the road? Yes, it can be canceled at any time. It is offered through a group. So once they have enrolled, if they cancel and would like to come back on the plan, they would only be able to do so during the annual open enrollment. Can you explain a bit more detail the 500 hours per year commitment that a member needs to complete? Also, is that just for the member or would the spouse need to complete as well? That is just for the primary member. The 500 hours per year, it's just having the app on your phone with the location services turned on, and movement. So any activity that they do, which so driving around, moving throughout their house, even it's picking up their locations of where they go. So it's about 10 hours per week that they just have to be in some sort of movement to meet that 500-hour minimum. Let's see. Can you clarify maternity benefits for the indemnity plan? So for the maternity, the key for the maternity is that 6-month look back and 6-month look forward. So it would not be covered if the insured or client was pregnant at any point in the last 6 months or in the following 6 months. So you could not enroll an actively pregnant person on the plan and the indemnity would pay out for maternity. What is the cutoff for enrollment for a first effective date? So that goes back to the depending on if there are 30 or 31 days in the month with that 7-day waiting period. So for example, this month with 31 days, the cutoff would be the 24th of the month. So in order to get an August 1st effective, you would have to have an enrollment by the 24th. Is the geodata tracked via an app on their phone? And what happens if the hours after a year are short of 500. Yes, the geo data is tracked via an app, which is rolling strong. What happens if the hours after a year are short of 500? Technically, they are at risk of losing the coverage, but to be completely honest with you, we have not come across that problem at all. So I they would be at risk of losing coverage. Is list bill available for employer groups? Yes, it is. Just something to note for many employer groups. We do have to have a minimum of 5 to get that set up. I have a healthy client that broke her leg. Since there is no pre-existing condition exclusions, would she be able to use this health insurance for her broken leg if she waited the 7-day waiting period? Yes, she would. You mentioned 4 or 5 states that have high rates. What are those states? I caught Florida and Texas. I believe the others are Georgia, North Carolina. Let me go back in slides. It's in my notes. Florida, North Carolina, Delaware, Texas, and Georgia. Delaware. Are the medical plans plan year or calendar year? They match the marketplace, so they begin January 1st. Robert asked, what's the phone number to Advanta, the bill negotiator? I will have to pull that and I can email that to you. Just to clarify, your health plans are available in California. Yes, they are. The excluded states are Alaska, Hawaii, Massachusetts, and New Hampshire. If the client has not satisfied their survey requirements for the year, are we, as their agent, notified so we can let the client know? No, and to be quite honest, I'm not sure if we would be notified. I think that it's more if someone has downloaded the app and then deleted the app, they're definitely going to be at risk of potentially losing their coverage. But as long as they're sharing some data, then they're able to stay active. Can an uninsured person enroll at any time or only doing annual enrollment? As long as they have never been enrolled with us before, they can enroll at any time. If they have previously been enrolled with us, they have to wait until annual open enrollment. How can we get these slides or printed info? I can get with the contact at HST and send the PDF of the slides for sharing. Is this a nationwide service? Yes, it is. How would you set up a list bill since the client has to fill out an application? So we don't offer list bill for individuals. So they would be the ones filling out the application and entering their own payment information. The list bill would only be for our W-2 employer groups, and their setup is quite different than for individuals. So it's just a different system. Is there marketing materials that we can use? Yes, in the broker portal, there actually are customizable marketing brochures that are available to send out to clients. You can have your own information added to them, and your logo, your address, phone number, etc., and you can select which products that you would like to be on there, and those can be sent. Let me go back to my emails really quick at the end so you guys have my contact information. There we go.
Well, I think that concludes it. I really appreciate your time.
I think so too. No problem at all. And I'm happy to help with any other questions that may come up. And I think the only question I might have missed is regarding how to get appointed through you guys, and I was going to let you answer that one.
Yeah, I'll let Dan Giancola answer that. We'll go ahead and end this. I want to thank all the AHCP agents and the HST agents for popping on here. This recording will be in Lead Master, and I will send it over to Steve so that we can get it out to those folks too. So thank you again. You have a good day.
Right, thanks.
Bye.